Hello, Southwest Florida homeowners and homebuyers. Welcome to the 239 Real Estate Roundtable podcast, your go-to source for navigating the vibrant real estate landscape of our beautiful region. I'm your host, Kevin Tremmel, a local real estate agent, leader, and investor here in Southwest Florida. On this podcast, we bring you insights from best in the business, top-notch real estate professionals, seasoned agents, and experts in everything from homeowners insurance to mortgages, maintenance, and repairs. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with tips, strategies, and valuable insights to make your journey in Southwest Florida's real estate market a breeze. Get ready to unlock the doors to successful home ownership. This is the 239 Real Estate Roundtable podcast, where we demystify the process, share insider knowledge, and ensure you're well-equipped to make informed decisions. Let's dive in. Welcome to another episode of the 239 Real Estate Roundtable. Today we have Ricardo Johnson on the show. Ricardo is the founder and CEO of OASES. OASES is a platform that connects luxury resort developers with investors through tokenized co-ownership. And this approach allows investors to own fractions of premium real estate properties, providing flexibility, security, and access to higher-end resorts. I'm super excited for a conversation. It's something I personally don't know a lot about. I'm familiar with the concept, but it sounds like your approach is bringing something new to the table. So I'm excited to have you on the show, Ricardo.
Thanks for having me, Kevin.
Awesome. Well, why don't we get started and talk a little bit about you before we dive into your company? Who are you? Where are you from? Where's your company based out of? And how did you get here? What did you kind of do before you founded this company? And, just tell us a little bit about yourself.
Okay, so before I started OASES, I was a real estate manager and investor. So primarily based in the UK. Essentially what I did was secure investment opportunities for private investors. So people who have the money but don't have the time, they would use someone like myself who would go out there and negotiate and find the best deals on their behalf. And just in the process of doing that for the past 8 years, it just exposed me to a lot of the lucrative opportunities that you can get in real estate, as you know. And it's literally from that, I learned a lot about, how to market these opportunities, how to secure them. And because of the type of returns these investors are looking for, it steered me towards the vacation rental market. So primarily like Airbnb and Booking.com managed properties. So that's where my management came into place on that side. So, over time, I've managed to build a portfolio and looked at a way to really make it more accessible. How can I make these investments accessible? Most of my clients were very affluent, high net worth individuals, but how can I really make this accessible to everybody? And I turned to blockchain technology to do that. So for the past 2 years, I've been tokenizing real estate, and OASES is the updated iteration of my company now, where we have a fully integrated marketplace all in-house into one platform.
Awesome. Yeah. And I think it's important for us to maybe start at the basics, right? Because this is very new technology. Not everybody might be familiar about, what tokenization even means. So can you in basic terms, I guess, explain to us how does real estate tokenization work? Kind of break down fractional ownership and things like that, please.
I think a way you can look into it is the fractional ownership is what do you call it? It's actually quite popular in Florida, where you own a fraction of the property, you get timeshare. Okay. Yeah. So you can think of it more as like a timeshare in terms of the way that you can actually own a fraction of the property. But with timeshares, you're quite limited to the number of people you can have who owns it. So it's quite typically, it's up to 8 people. And instead of actually owning the property, you have some ownership of the property, but primarily you're getting time within that property. That's what you're actually investing in technically, right? So what tokenization does in this instance is allows a lot more owners of that property. So you can have, hundreds, maybe even thousands of owners of a particular property. But this, instead of having time in the property, is primarily based on the return. So the property is managed on your behalf. It's like a purely passive investment, it generates income, and then that income is then distributed to the owners. What this does, it allows you to have, instead of having to own, let's say, an eighth of the property, and let's say the property, is $1 million, how much the hundreds of thousands that you need to buy that, This way you can actually come in and invest with maybe hundreds of dollars. So that's how you can get a lot more owners involved.
Yeah, and I'm familiar with, obviously timeshare is very popular in the United States. I'm not sure how it is in the UK, but, and then just uh, shared ownership where is also becoming popular, where it's not necessarily like a traditional timeshare, because timeshare gets a very bad rep. But where just some, maybe five affluent families get together and they buy like a resort in Colorado for skiing kind of thing, right? I mean, that's
Exactly. Yeah.
becoming like increasingly popular, but all that obviously is still like most of the time with the aspect of like we're vacationing, right? We're using this more as like a vacation home. So where you come in, this is more like an investment, right? And if someone doesn't
Exactly.
have, the barriers to entry to real estate investing in the United States is a little bit lower, I would assume, than in the UK. If the UK is anything like Germany, where I'm from, where it's like, I mean, yeah, like you're pretty much putting up
25%.
50%.
Yeah,
Yeah, I
exactly.
mean, just,
A lot of money.
absurd amount. Yeah. So where you come in is like just lowering that barrier to entry, almost like when someone buys like a fraction of Bitcoin, right? Like not buying
Exactly.
one full Bitcoin, they're just buying $100 worth or $1,000 or whatever it may be. So that's kind of where you come in.
Exactly.
Yeah.
Exactly.
Awesome. Cool. And then you're saying like, so in order to get the returns that most investors want to see, you're really focusing, like your portfolio is really focusing on short-term, like vacation rental style homes. Did I understand correctly?
Yeah, so I suppose that's how we separate ourselves in the marketplace. So we focus on the vacation rentals. One, we can get the higher returns, but two, we can also offer ownership perks. So let's say you do own a higher percentage of that resort or that property, you can get maybe discounted stays or even complimentary stays. So this is kind of how we bridge the gap between something that's, a full commodity to something that actually has some tangible aspects to it.
Yeah. Okay. Awesome. And can you shed some more light on, on this whole process? I guess where does like blockchain come into the equation, right? Because I mean, so far, I think what you're mentioning, like a lot of that can probably be done with traditional contracts, right? And traditional
Exactly,
flow
yeah.
of money, right? So I guess my question would be like, where does the blockchain and that kind of stuff come into the picture?
So what we do is essentially, instead of just having the shares of the actual company or of the actual asset, you have the tokens, which means you can actually have an active secondary marketplace. So instead of, let's say you did have the five families who came together, if one family wanted to sell, they only really have the other four families, or maybe they can find someone else who, but it makes it very illiquid. Whereas having a secondary marketplace where you can list any of your tokens for sale, you can quickly liquidate your positions if you ever wanted to sell or if you ever wanted to buy. You also have the transparency aspect to it. So each token obviously is on the blockchain, so you can actually see the actual transaction history of that particular token. All that's transparent on the actual blockchain, how much it was sold for, who it was sold to, etc. And then it's all done through blockchain technology. Is super secure, so you can't double sell the tokens, for example. All these things are more secure as an actual asset.
Yeah, for sure. Yeah, awesome. And that's obviously where the world is going towards. So
Exactly.
it's only a matter of time kind of on how, until real estate kind of shifts that way as well, obviously. But I guess I'm just curious, how did you were working as like a property manager, managing properties, finding deals for high net worth individuals. I guess how did you like make that connection? When did you have the idea of this? Because, it's quite unique, quite new. New is always risk, but high reward, right? But I guess like, where do you have the idea of like, oh, I'm gonna do this, like what kind of sparked that?
So by the time I actually was introduced to blockchain technology and smart contracts, the first tokenized property has already been tokenized. This was back in 2018, 2019. I was introduced really around 2019. So when I understood how the technology works and the different applications you can use it for, because I was in property, that was the first thing I said, what, that would be perfect. This is where the future is going. Obviously, at that point, properties already started to be tokenized. People could invest. So I thought, okay, perfect. But I had to shelf the idea because I suppose the transition between where I was at that time to where I am today, in terms of that knowledge gap, it was empty. So I had to shelf it. And I just thought, what, I'll come back to it, And it was late 2022.
Yeah.
This is around about the NFT, if you know about the NFT
The hype.
craze at that time. Yeah, exactly. And I think one of the main applications that NFTs really did was allow this technology to be understood on a different level and actually applied on a different level. So for someone like myself who's non-technical, it was very easy for me to apply that technology to create a smart contract, to create artwork, and there was already, existing marketplaces where you could list those tokens. So for me, I was like, okay, now it's easier for me to do. How do I do it? So at the time I was, securing these type of deals. I had a small community of investors, and I said, hey, would you be interested in investing with the tokens rather than, instead of coming, say, 50-50 on a deal or something like that, you can actually buy maybe 10% or 5% with these tokens. And for that year, I was able to tokenize a few deals that they're still existing now, and those investors are still generating passive returns off those investments. I was like, okay, so that was like my way of testing the market. And then all the issues that I found with that process in terms of people having to create a wallet to actually purchase the tokens, people having to transfer their fiat money into USDC, which is a stable coin, to make the transaction, all these hurdles that they had to overcome to invest. I was like, okay, there must be an easier way. So that's where the idea of OASES came, where I said, you know what, now I have the connections to different developers around the world. I have the skills and the experience in terms of negotiating and securing these type of opportunities. And now I have the information and the experience of being able to tokenize. So I could figure out a way where we could have a whole platform where you can invest with fiat as well as crypto if you want. You can complete the KYC within the platform. We have the secondary marketplace within the platform. And it's just a nice and easy way for anyone to invest within minutes, essentially, instead of having to go through that, that learning curve.
Yeah, right. So easy, even my dad could do it. No, probably
Exactly.
not.
Exactly.
And then, so when you say blockchain, I mean, I know the basics about crypto and blockchain. So, this question for you might be like super trivial, right? But when you say blockchain, like what blockchain are you running on? Do you have your own, or are you like on the Ethereum, or how the NFTs were mostly Ethereum based, right? And then like, so do you have your own, or are you like on some sort of like blockchain that already exists? Like, if that makes sense,
Yeah, that makes sense. Total sense. So our tokens are actually built on the Base blockchains. This is Coinbase's own blockchain.
Yeah. Okay. Gotcha. Makes sense. All right. I'm with Coinbase, so I'm definitely familiar. And then I guess how is the framework of like legalities and the law in the UK with all this? I'm sure there were some hurdles, right, that you had to overcome and probably still have to overcome when it comes to, in America, we would call it like the SEC, right? Like Securities and Exchange Commission, or just like a legal framework of tokenizing real estate. Like how is that in the UK? Where do you see the future of that kind of going? Has it already gotten better? Has it changed? Where is all that?
Well, the UK actually doesn't have, they did have a regulatory body in regards to like securities, but in regards to tokenization, there isn't really a framework already in place for it. So we don't actually tokenize within the UK. So our tokens are regulated within the SEC in USA under, Regulation D. So you register under Reg D, Reg S, which means we are one side restricted. So we can only sell to accredited investors as under a private sale, for example. But that's the way that at this point you're able to navigate some of those regulatory hurdles. Eventually you can register as a Reg CF, which is a crowdfunding regulation, which means you can sell to retail investors. But it's a lot more complicated and there's a lot more restrictions involved at that aspect. So most tokenization platforms and most tokenized real estate are done through a Reg D, which means you can sell in the US to investors, to accredited investors.
Yeah, and I guess now that Trump is, not to get into anything else that he does, but now that he's president, I mean, you must be happy, at least in that regard, because, he's clearing house at the SEC and really kind of like dialing back a lot of like the crypto blockchain, oversight and regulations and all that, right? Are you noticing that, or are you looking forward to what the next 4 years hold?
This is literally what I've been waiting for. It's tricky because I understand that the premise is to, protect investors, and obviously these rules were put in place prior to the tokenization of real estate. It's there to protect investors from all investment opportunities or anything that they can deem as a security, right? But as technology is advancing and as investors are, I would say now, are a lot more savvy when it comes to using investment platforms or doing due diligence on investment opportunities like tokenized real estate or tokenized artwork or anything of that nature. There's a lot more demand for it. So the regulation really has to catch up with the demand for this investment opportunity or this instrument, right? So I think like now is the time. So with President Trump in place, there's an initiative to maybe not necessarily get rid of these regulations, but maybe relax them a bit, or at least open the doors for new innovation, because really it's stifling innovation in this space.
Yeah, awesome. That's cool. And like you just mentioned, obviously real estate tokenization and tokenization of artwork and like other assets, still a pretty new concept. Where do you see the industry heading in like the next 5 to 10 years? And how do you kind of plan on, kind of staying on top of the curve and riding the wave up, so to speak?
Of course. I think all assets will be tokenized eventually. The blockchain, the main application for blockchain technology is this, not necessarily real estate exactly, but for tokenizing of assets to bring in these financial instruments on chain. They're really talking about, being able to track government spending on the blockchain. It means it's a transparent ledger. Everyone can access it. Everyone can see it. It can't be changed. For example, this is the best use case for this technology. So in my opinion, all assets, everything will be eventually put on the blockchain rather than having centralized databases or anything of that nature. Everything will be transparent and liquid.
It'd be crazy to see what Elon Musk does with Doge. I mean, if he implements something like that, that would give the industry a huge boost in credibility. Obviously, if the United
100%.
States government is, that would just be crazy to see. And crazier things would have happened, right? So,
and you got to think like all the things that they're uncovering, with how the money is being spent on and these type of things. I mean, there's a reason why we haven't. This technology's been around for over 10 years, but there's a reason why it hasn't been put in place in these instances.
Yeah.
So I think once you open the door to that and they're able to expose everything and say, okay, this is what we have here. This is how we're going to protect everyone in the future. This is how we're going to, and I think all the other countries in the world will eventually follow suit because everyone's going to demand it,
Yeah, 100%. Yeah, and it's kind of what democracy, would be all about, right? Like not
exactly
to get philosophical, but I feel like that could really be like a next evolution in like democracy, where just complete transparency, because at the end of the day, it's tax. A lot of this is taxpayer money, right? So like
exactly,
and then it really be like super transparent if like guys like you and me could just sit in front of our laptop and look it up, right? Blockchain and things like that, and transparency with government. So yeah, it's super, super interesting what may happen. And then I imagine, so you said you have investors, and I imagine like, can you kind of describe what type of investors are these? I mean, I imagine are they either like institutional or like more like younger people, right? Because I'm sure there's one of the biggest challenges you might face on a daily basis is just getting people to kind of adopt this new investment model, right? How do you kind of overcome that? And who like are your current investors? Are they more like companies that already know the value, or like younger people that already like, yeah, I know what you're talking about. Like, you don't have to explain it to me, or is it like describe that a little bit?
So traditionally, for tokenized assets, the main market is institutions. At the moment, in terms of my customers, are not institutions. There are, really high net worth individuals, essentially people who have made a lot of money within crypto and want to access or diversify their portfolio. So instead of having to sell their Bitcoin, for example, and then say, okay, I'm going to invest this in some land or some real estate, they're able to directly invest that crypto into another digital asset, which is backed by the real world asset. So they don't have to off-ramp any funds. So for someone who has a high portion of their net worth is, as you can see, is very volatile. So being able to access lower risk, real world assets on chain is a very valuable proposition for them.
Yeah. If they can kind of get rid of some of the volatility. That's an easy, like you said, easy value proposition. So, and then one of the last things I want to touch on. So you said one of the draws of OASES is also the lifestyle component, right? When you own a certain amount of shares in a property, you kind of get perks and things like that. Can you shed some light on that? Like, how does that look? Is there like a set structure in place? Like you own X amount of shares, you get X amount of perks, or like how does that kind of function?
So it depends on the individual resort. So what happens is a developer would be, developing a resort wherever in the world, for example, and they would initially be selling their units to individual investors. So they would operate it and have a management team in place who would manage the property, and they would allocate, let's say, some time for that owner who, if they want to actually stay in that property. So what I do is I go in and I'll negotiate the terms of that. So for example, it could be to say out of the 52 weeks, I want to, allocate 2 weeks to the owners of this property. Then what I would do is then say, let's say this property is tokenized into 100 tokens, right? So there's 100 individual owners or 100 shares available. I could just say, so we all put this on the platform into a protocol. So anyone who owns more than 20% of this property or who holds 20 tokens of this property gets another token. So it's like a digital voucher for a 1 week stay within that property. So that's all done on the blockchain in a protocol. So there's no middleman, essentially. They have the tokens, they get access to the voucher, they could redeem the voucher and stay in the property and, book their week with the actual operator. So that's kind of how we can do it. And then for people who say own, more than 5%, they get 50% off any stays. So it then gives you, not just having the financial benefit from this investment, but you can also have the lifestyle benefit also. So then just imagine you own properties all over the world. So you have maybe 10% in this one, 5% over that property. Depending on your lifestyle, you now have access to multiple properties where you can get free and complimentary stays, as well as a great return.
Yeah, very cool. Yeah, awesome. So yeah, I want to thank you for your time, Ricardo. I definitely learned a lot. I think this is new to a lot of people, to probably most people listening. So thanks for bringing us a little slice of your world and what the future of real estate might look like. I think it's really, really cool and also really important for people to kind of stay with the trends and with the time. So thanks for your time on that. And then we'll obviously link all of your socials and website in the descriptions below. But if somebody wants to learn more about the technology and about your company and maybe even become an investor, where's a good place to start where they can kind of get some more info and get in touch with you?
A great place to start is ownoases.io. There's a learn section, so it has some articles and videos where you can learn and get a better idea of how you can get involved. And then if it's for you, you can sign up and start investing.
Okay, awesome, man. Thanks. And you have a great day. I know it's late over there on the other side of the Atlantic, so thanks for making the time and you have a good evening.
No, thank you, Kevin. Thank you for having me.
And that wraps up another insightful episode of the 239 Real Estate Roundtable podcast. I hope you enjoyed our discussions and gained valuable knowledge to enhance your home ownership journey here in Southwest Florida. A big thank you to our incredible guests and of course to you, our listeners, for joining us. If you have any questions or topics you'd like us to cover, or if you'd like to connect, feel free to reach out. You can find us on Instagram at Kevin Tremmel _real estate, on Facebook at Kevin Tremmel Real Estate, or visit our website, kevintremmel.com. Don't forget to subscribe so you never miss an episode. Your feedback is crucial and we're always eager to hear from you. Until next time, this is Kevin Tremmel, your host, signing off. See you on the next episode.